Good evening. This is Frank, and it is past the top of the hour at 6 p.m. Eastern Standard Time, and I am going to be your host tonight. However, we do have a guest speaker, and it is the president will be speaking to us. The president, the president of finance agents.
That's right. Let's say that.
I love it every time when somebody calls and Trey calls me. I say, excuse me, I got to get this call. It's the president. And then when they call me back, they say, you talked to Donald Trump? No, I talked to Trey. He's the president of our company.
Yeah.
Anyway, welcome, Trey. Welcome, Trey. We are so glad to have you. We had such a wonderful meeting this morning, and I really enjoyed it. And it was so exciting that I've asked Trey to come back for this evening. And I sent out an invitation to everyone, and over 150 people opened it. That means 15 usually show up, but whatever. All right, so without any further ado, I am going to make you the host, Trey.
Okay.
And if you see people come in and it says somebody is in the waiting room, just click admit.
Okay, so let's make sure I'm doing this. So the waiting room will be.
I don't know if you even see the waiting room.
I don't see a waiting room.
Okay, I'm going to see if maybe I can do it. All right.
It popped off and on earlier today when I let people in.
Okay.
When there was somebody waiting, it would pop on up in the top center screen.
Good.
Okay.
Good,
so
good.
it'll pop. There'll be a pop up if someone wants to join. So okay. All right. Well, thank you, Frank. Thanks everyone for jumping on. I guess this is kind of like the daily double. You know, we had the first round, and this is the second round. And so Frank wanted me to jump on and talk about, what you're going to look for when analyzing a credit report, specifically for the unsecured business finance program or unsecured personal finance program or personal term loan. So specifically for those funding products, because it can be totally different for other funding programs. And so with what Frank has been doing for years, the left hand, right hand, it's an invaluable asset or a valuable product to use for people's real estate investing needs, especially for fix and flip. So I literally, not exaggeration, this is not a Trump exaggeration. I've helped over 1,000 people with this program over the years for their real estate investing aspects. So, and definitely, I know, Frank, you want questions as much as possible. So if you have something, chime in. Let's definitely address it if there's a question of what we're talking about. So, but one of the amazing things about the unsecured business finance program is all you really need to pre-qualify someone is the credit report. And so it's not like an SBA where you got to get tax returns and bank statements and financials. It's simple, low documentation. And that's a big selling point for the program. And so what I like to do is when talking to a potential client or a relationship, like a referral partnership, get the question a lot, like, what is good credit? And so I liked, if you've gone through the masterclass, the unsecured finance masterclass, we kind of talk about this as part of the certification test. So I like to describe it in a certain fashion. So I number it out in 5 things, like number 1, scores of 700 and above. And as Frank, you mentioned in the first call, I used to say 680, but I've kind of raised it due to what's going on in the world, the lending environment. So that's why I've kind of raised that number. The second thing would be they need to have depth and history to their credit. That means really open credit cards. Someone can have really good scores, but if there's no depth, it's not going to be a good fit. The third thing that our internal underwriters look at would be for negative items, derogatory items in the last 2 years. I never want to see a bankruptcy or foreclosure on the credit report. For example, I literally just about 15 minutes ago, I had my lead underwriter, Jeremy Dackett, say one of our new files, husband and wife are both doing the program and they both have new collections just that popped up recently. It's like, that's not good. So derogatory items of recent, I want to stay away from. The fourth thing that we're kind of looking at is their credit card debt. Don't want to see people who are maxed out on all their credit cards. They're being judged on that. So a good rule of thumb is, be at 60% and below utilization. And then the fifth thing that our internal underwriters are looking at on your client's behalf is, inquiries, shopping around in the last 6 months. I'm not concerned about a mortgage inquiry or an auto loan inquiry. It's more about personal or business capital inquiries.
So this is our flagship product. This is the one that's been the longest running, most profitable program that finance agents and Easy Financial have had, and coupled with the 125% buy, fix, and flip, it has proven to be an extremely strong and extremely powerful tool over the years, helping people to get that mortgage and get that buy, fix, and flip property. But the things that we want to look for is everything that Trey has just said. And the things we want to avoid is a lot of inquiries. Now, many people, when they're shopping around, they won't realize that those inquiries are having a negative impact. So, Trey, can you explain to me why those inquiries, more than 6 inquiries in the last 6 months, would be a detriment?
Sure. So think about it this way. Let's say I'm the bank of Trey, and then there's a bank of Joe and a bank of Diana, and you come to the bank of Frank. That person goes to the bank of Frank to get money, and you can see that you've been going everywhere for money. That's going to cause concern. It's like a red flagging system. So if we have someone that we've looked at and they have inquiries with Chase and Bank of America, it's just limiting the possibilities of what can be done for them as a client, because they've kind of shut themselves in the foot. So inquiries are a red flagging system in place by the lenders, and so they're going to be leery if they see someone who's gone to multiple lenders in the last 3 to 4 months or 3 to 6 months. So it eliminates more potential banking relationships for your client when we're going through this funding program.
So if I'm working with a client and the client says, "Oh, I could do that myself. I could get those credit cards. I can get that line of credit myself." Why would we want to dissuade them from doing such a thing?
Well, it's a good question. I mean, I'm going to come back and say, well, Mr. Jones, at the end of the day, what our fulfillment team is going to be able to do that the consumer really can't do is, first and foremost, know which banks are lending and what the criteria would be. That's what we do on a daily basis. Secondly, we're going to be able to piece it together to get the maximum amount of results. Thirdly, we're going to get better promotion rates of 0% compared to what you possibly could get. Fourthly, we're going to get better limits. You may get like one account with a $3,000 limit, but we're going to get an account with a $10,000 limit. And that's going to boost your credit. That's going to be rocket fuel for your credit profile long-term, and make it easier to build a strong foundation. And then last but not least, even we'll get denials here and there, but we'll be able to overturn them about 75% of the time. So, we do this every day. How often does a consumer usually do it? And so, you get what you pay for. So that's kind of what I kind of convey to the individual. And I'll even say this, Frank, I go, listen, this happens once every maybe 1 to 2 weeks, once every 2 weeks for sure. Someone who was pre-approved in the past, who did not move forward, they come back wanting help now. And I can't, because they've shopped themselves around and got the inquiries with no results. They're dead in the water. So I'll tell them that. Just be straightforward with them. So this is how I describe credit, what's good credit in a simple fashion. I like to number it out so it helps break things up. It's easier to absorb. So these are the 5 areas, even though there's a lot more detail, which we're about to go to here in a second. All right, Frank, can I move on?
Okay, yeah, go ahead.
Okay, all right, cool. It's a puzzle. There we go. Okay, so with the unsecured business finance program, remember, we're talking about that program. It's different for like maybe an SBA or equipment financing, but what we need is a full report, not just a summary. I can't tell you, this happens maybe 2 to 4 times a day. A potential client or referral source sends in a credit report that's just a summary, and that does not help. So make sure you educate your client on what is needed, the full detailed report. Now, it needs to be within the last 30 days because things can change fast. So if someone says, hey, Frank, and my report's back from September 1st, can you still use that as a review? What's Frank's response?
I'm going to tell them that no, I need a current report.
That's right. And the reason being is things change and you cannot waste your underwriter's time and effort because you're dealing with old information. So within the last 30 days. And then, we don't run people's credit internally. We don't want to cause an inquiry. So therefore, we want to recommend IDIQ, and why do we like IDIQ, Frank?
Well, there's many reasons, and one of the reasons is because of the way it's laid out. It's very easy to read the report. It's very easy to pick up on the small little things that would generally swamp a file, and it's easy for us to work with should we go to the next stage, and the next stage would be credit repair, credit restoration, or credit sterilization. If we have Identity IQ, we can get in and we can see what's going on with the file. We don't have to wait 30 days for the credit bureaus to report. So there's a lot of benefits for them to work with Identity IQ with us.
Definitely. And so, this goes back to, we're looking out for them. We don't want to run their credit. We don't want to cause an inquiry because that, again, is something that could affect them qualifying and possibly disqualify them. One bureau is fine. So with Identity IQ, it provides all 3. So, getting all 3 is great. But if I were to say any of the 3, Experian probably the one I would recommend. So if someone says Experian 650, TransUnion 720, and Equifax is 615, then something's not jiving. They're not consistent. So I would want to see the lowest credit score, so we see everything that's going on instead of wasting my time and hoping that lenders use the other bureau that doesn't reflect the negative items.
And in a real estate environment, what they do is they use the mid FICO. So whatever the mid number is, the middle number, that's the number that real estate mortgages use.
Right.
And so what Trey is saying is not everything is reported on every bureau. There's actually a fee to report on a bureau, and that's how the bureaus make their money, by charging fees. And so some companies won't report to all 3 bureaus. They'll only report to 1 or 2. And if they're not reporting to the 3rd one, and you have an 800 FICO with one and a 650 and a 655 with the other 2, that's what Trey is referring to. One bureau may not have been reporting a collection or something like that.
Mm-hmm. That's right. And then, credit scores are just for the consumer for the most part, obviously lenders, but if someone's got a score of 650 and above, then let's definitely look. Let's take a look and, let's provide them some guidance of what needs to change. It's not like, okay, your scores are too low, we can't help you. Let's perform a review and show them either what collections need to come off, or inquiries, or pay down debt. So let's not be bashful. Let's definitely do a review if they're 650 and above. All right, let's kind of touch on, what you don't want to see. So when I look at a credit report and I'm doing an eyeball test before I submit it for a review, what are some things you don't want to see that are going to be considered bad? And, first thing is sporadic late payments. So, one blip or one late payment, okay. But if someone has a 30 and a 60, then a 30 over here, then another 30 over here, that's sporadic and that's more of a trend. And for this program, that's not going to give lenders confidence. Then open collections, tax liens or judgments. If they're open, that's the key word, open. If they're closed or paid, that's okay, great. But an open collection, no bueno. A tax lien they owe, not good. Got a judgment, it's not going to work. So open tax liens, collections, and judgments is something I'm not going to want to see. And obviously, Frank, right, it's going to be, these things are going to be in bright colors. It's not going to be hard to miss these if you use an ID and IQ.
And again, what we're trying to say here is this is our flagship product. This is the best product, and we're looking for the best clients, the most qualified clients. This is not all of the products that we have. This is just the three that we talked about: the unsecured business funding, the unsecured personal funding, and the personal term loan. Those are the three that we're referring to.
That's right. Bankruptcies or foreclosures. So don't want to see a bankruptcy as someone's credit report, really, in the last 10 years. If you might have someone who had a bankruptcy, Frank, like 8 years ago, and they've rebuilt their credit. They've gotten a couple of credit cards with nice limits and age, then possibly it could be an experimental file. But since it's unsecured funding with these programs, it's not good to see someone who's walked away from their debts, like going through a bankruptcy. Max out credit cards. If someone's highly utilized and over leveraged, then that's not good. So I literally got off the phone before this call with someone who's over the limit on one credit card and has an AMX that's really highly utilized. He's got to, address that before we can help. So I can definitely lay out a game plan, but we're going to, give them specific pay down instructions so they can qualify. So I'm not really worried about the other debt, like an installment loan or mortgage or auto. It's really what we're talking about here is their personal credit card debt.
So before we go on to the next one, zero open credit cards. Okay. Before we go on to that one, there's something that's almost as deadly as well, and that is to have credit that has a zero balance. A lot of mortgage brokers, loan officers will say, go pay off all your credit and then come back to see us. Well, if people have their credit paid off, a zero balance on their credit cards for 3 to 6 months to maybe a year, what might possibly happen to those?
I'm not gonna frown upon that, I guess, Frank. I really haven't come to that issue with either the lead underwriters, Mr. Ed Bond or Jeremy Daggett, come back and saying that's an issue.
Okay.
So
in the real estate arena, sometimes your debt to income is out of whack, because what ends up happening is if you haven't used that credit card for a year, sometimes, and it was a $5,000, $10,000 line, sometimes they will close the line or reduce you to $1,000. And now all of a sudden your debt to income gets out of whack or out of balance.
Right. Yeah, definitely. And that's kind of its own separate problem. So we experienced that a lot. It seems like back like in 2009 and 2010, when lenders were taking credit back off the street. So I remember a decade ago when we had problems where we would have someone pay down their debt and then the lender would cut their limits, like you're saying. We do know of some lenders that are cutting credit back in today's environment right now, but the thresholds are a little bit higher compared to what we're dealing with. So we haven't seen any any blowback with people paying down their credit cards and having those limits slashed. Thankfully, I've been very fearful of that the past couple months and through this year, so I haven't really seen it. And I only know of from our underwriters investigating certain lenders, they're trying to get all their borrowers under a certain threshold, and that's much higher, like 75,000. So anyway, yeah, so not worried. What I will say is, you can have a zero balance on a credit card, but maybe you haven't shown that you've been able to use the credit and pay it down. That is kind of a detriment that we'll talk about here in a second. Then the last thing I kind of don't really want to see, well, the second last thing is zero open credit cards. So that's the easiest thing to do when you see a credit report. Look for their open credit cards, not charge accounts, but credit cards like Discover, AMX, Citi, Wells Fargo, Bank of America. That's what the lenders are really judging their usage on as a borrower and comparing it to, because they're trying to compare apples to apples since they're lending business credit cards. So someone has zero open credit cards because maybe they just didn't use them. The phrase, right, Frank, cash is king. I hear that, once a week. So it is, cash is king, but there's no track record. So when you do need help and you come to me and talk, you didn't need any help the past 10 years. Well, now you do. You don't have a track record. So I'm sorry.
It's better to set your clients up for success than set them up for failure.
Love that. That's nice. And then, the other thing kind of mentioned here is if, and hopefully, and this is something you have to educate your potential clients on. They don't really understand what an authorized user is. So if someone has an account where it's an authorized user account, it's based off someone else's credit, not their credit. So the lender is not going to give them, credit for that account when they're, analyzing a potential new client. So, take a look at the who owns that account. Is it, that person, or is it an authorized user, which would be someone else?
And if it is an authorized user and it's a relative, father, mother, uncle, aunt, son, daughter, and if it is somebody that is in their close proximity, then in a later time in this presentation, we'll find out how you may be able to use that relationship as a credit partner to get those people who were less than perfectly approved, get them approved. We'll talk about that in a minute.
Right. So these are some things that we're not wanting to see on someone's credit report. So, and then I guess the last thing is don't want to see a lot of bank inquiries. So remember inquiries we talked about, you can see, and there is no specific number. It's just the more lending inquiries you have, like for personal or business capital, the less likelihood we're going to have success, and you're just shopping yourself out of the picture. So
you want to make sure that your clients and yourself, you want to make sure that you convey to them that you need to be the one that they need to come to. They need to not shop around. You are a one-stop shop. You have everything that they need. And if they go around to other places to shop you for price, they could be preventing themselves from getting any money at all just by trying to save a nickel or a dime.
Yes. So very prevalent for someone to say, okay, someone who's pre-approved, but they haven't found that property yet, or they have to get their ducks in a row. I'm going to make sure I say, well, okay, great. You're pre-qualified. I can help you, but don't run your credit over the next month or two. If you do, you're most likely going to be disqualified. So I'm going to let them know that you got to be mindful of that. Okay, let's move to things you want to see, as a journal guideline, things you want to see on someone's credit report. And like we talked about in the first call, is imagine two columns. There's a good column and a bad column. And so you want to put a check mark in the good column as many times as possible. So, just from a easy consumer standpoint, I'd like to see 700 plus type of credit scores. But again, it's not the most important thing. I want to, make sure that their current home address is reflecting on their credit report. So lenders are going to want to see the current home address on the report of the individual, and not some past address. Having a mortgage that's open is not a requirement, but it definitely helps. So if someone does not have an open mortgage, then they need to have a little bit deeper credit profile with their credit cards. But if they have a mortgage, that's a good check mark in the benefit column.
Earlier today, when we came up with that mortgage, I had a question, but I didn't ask it. So
Okay.
I'm going to ask it right now. If they have you said open current mortgage, what if they have a closed current mortgage? They've had the house for 30 years. They've paid it off. Maybe they had a mortgage burning party 6 months ago.
Mm-hmm.
How will that affect them?
I don't know if it's going to help them, Frank. So it's only, I think what's only being judged is having an ongoing, responsibility. Even though paying off their mortgage in the past definitely shows they're responsible, I don't think business lenders are taking that in consideration. And I don't have a reason why.
Okay.
So yeah, it's a good question. I just don't, I don't know why. Then, what's the biggest determining factor is having open credit cards. Open credit cards is not, if it's closed, then it's not a benefit. So I feel bad for someone who they had great limits and great age, but they decided to close it because they just didn't use it. And then come around, they're looking for funding and it's not helping them. So open credit cards is what we're looking for. Now, in those open credit cards, what's really being scrutinized deeper is it needs to be revolving, like a cash credit. That means Discover, AMX, B of A, Wells Fargo, not charge accounts like a Best Buy account or Macy's. So everyone should be familiar and understand the difference between cash credit and vendor credit. So, vendor credit being a product, like quills and stuff like that for business products, which is reported by Dun & Bradstreet. Cash credit is, we're going to actually literally get cash, like still off a credit card, but Discover, Bank of America, Chase, Citi, that is cash credit. And that's reporting with the other business bureaus, which is Experian Smart Business and Equifax Commercial. So revolving credit. What's also being scrutinized is there's minimums. And so the minimum age requirement of a credit card to be a benefit is 2 years at least, 2 years of age for that credit card to be a valid benefit for that person. And then limits, limits are a great way of like a sign or a hint of how a lender views you as a borrower. If you get a $200 limit, that's not the best. That's probably the lowest someone's going to get. But if you got a $10,000 limit, then they view you as a prime borrower. So to be a benefit towards this funding program, unsecured business finance, the limits need to be $3,000 and above to be a benefit for that person. Usage, and we kind of touched on this a little bit a while ago, where someone can have a $10,000. Here, let me give an example. Someone can have a $10,000 limit. This is scenario A. They have a $10,000 limit on a credit card. Their high balance has been $9,500, and their current balance is $100. Then there's scenario B, same $10,000 limit. Their high balance is $1,000, and their current balance is $0. So it's all about which one would be more attractive to a lender, and it'd be option A or scenario A because they've shown the ability to use the credit and pay it all the way back down. So if someone has a nice limit, but they really haven't shown the ability to use it, and it's just sitting there, that's still a benefit, but it's not the ultimate benefit. Does that make sense, Frank?
Makes perfectly good sense.
Okay. All right. Then lastly with this slide, best account. How do you handle your best account? Like my best credit card I have is like Navy Federal Credit Union. They're going to analyze me a little more scrutiny on that account. So this is my best account with the highest limit compared to how you handle your lowest limit. So they're going to look at your best account, and that's going to great detail. I wouldn't expect anybody here to try to get this deep into analyzing things, but knowledge is power, and being able to instruct people is important. Okay.
And if you communicate with your people and educate your people, you will be grooming them not to be a customer this one time, but to be a customer of yours for life. And that's what this is all about. I'm wanting you to work with your people and reach out to them and be part of their life, so that when you solve their financial problem this time, they'll come back to you for the next one and the next one. People like to do business with people they know, like, and trust. And if you help these people get what they want, and you help educate them so that they understand why they shouldn't let a credit line go dormant, like I just pointed out a few minutes ago. If you explain that, buy some bread and milk on that credit card, buy some gasoline, take your wife out to dinner on that credit card every now and then, but keep it down under 30%. When you explain that to people and they see the value, and because of what you said, they see their credit scores going up, 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 they're going to know, like, and trust you, and they're going to want to do business with you.
Yeah, definitely. And that's something I know we need to improve on and help people in multiple ways and not just one and done. And the bottom line is this: with this program, most people you talk to and explore it are not going to qualify because there's no other variables like there are with SBA, like financials and tax returns and revenue, or like equipment where there's an actual asset, which is the equipment. So it's really credit driven. So it's very, very detailed. So you're going to have to guide them to get where they want to be over, for most people, over a certain amount of time. Okay. So real quick, remember to look at, make sure it's the name of the person you're talking to. And so, and confirm the date of how old the report is. Make sure it's current. Also, I like to look at the summary of the credit report. Like the credit report will have a summary. It gives a breakdown of how many open accounts, debt, negative items. So if you want to get a real quick snapshot, look at the summary. I'm going to be looking for negative items, these negative items that are in bright colors, red, yellow, not going to be good to see. I'm looking for open credit cards, and we'll go over that here in a second. I'm trying to look at what type of credit cards they have open and what are the variables to it. I'm looking at the inquiries section, how many inquiries, and then, again, I'm relying on my internal underwriter, because at the end of the day, if you're a consultant, you're working hard, you're not gonna have time to go into deep detail on every credit report that you're working with. So these are the sections: inquiry section, looking at open credit cards, and look for negative items, the summary section, and make sure it's the right name and the date is within the last 30 days. So once, let's say you submit a credit report for review, and that's the great thing, low documentation. If I had a lead give me their credit report, like right now, here it's 340 on the West Coast. I'm going to submit it for a review for the unsecured business finance program. I'll have feedback tomorrow for sure, guaranteed. If it was at the start of the day, then I'll have usually feedback from one of my lead underwriters later that day. So 24 hours, easily. Quick turnaround time to pre-qualify someone for the unsecured business finance program. Now, there's things I've learned throughout the years, and Frank, you know this, that I have these rules I like to stand by because it just it increases the chances of success. That's the motivation. So when you get a funding review, make sure you're going to be reviewing that with Frank or whoever your team leader is. So if that's Frank, review it with Frank first before anything else. So that's a key thing. And then we're going to leverage this funding review it builds credibility with your potential client, and it's going to make it easier to convey of what can possibly happen if they do move forward, or the issues that need to be addressed to help them over the long term to be better down the road. We do not want to present prior to the consult with the lead. So it's just super important. Let's say you have someone who's been pre-qualified, and her name's Jennifer. What you're going to want to do is, set up a time to go over the funding review with yourself and Frank. And we want to make sure that you have their complete attention. So I'm really particular. I want them to be able to be in front of a computer to spend 20 to 30 minutes talking about their business or real estate project and not be in traffic or be in a restaurant and be distracted. I want you to, demand their full attention. So, and what's going to happen at that point, Frank, won't you let them kind of know?
Well, basically what we'll do is prior to review, sharing the review, prior to sharing the review with the client, we'll have an appointment set up, a specific appointment set up. And as Trey said, you're going to ask them to be in front of a computer and with the door closed in a private room that they can just pay attention. And then you and me and the client will be on a three-way call. You'll refer to me as not Frank, but Mr. Alio, because it lends credibility to who I am. And when they hear me saying what they need to do, it just has a little bit more credibility to it. And so when we have all three of us on the call at the same time, then I will send. Now I do things a little different than what Trey just described. When we have all three people on the phone at the same time, then I will send you and them an email with the actual review. So now all three of us are on the same page, looking at the same material, and I will direct their eyes past any negative towards the positive, and then I'll reinsure the positive, and then explain what they have to do to overcome any negatives. That helps you out tremendously because it takes you off the hook. You're still the nice guy that they know, like, and trust, and that's the way we want to keep it.
So how am I different, Frank? I don't know if I say anything different than
well,
that's exactly what I would prefer, what you just said. So, okay.
All right. You just said that you're going to send it directly to them.
Oh, okay. Okay. My bad. So yeah. So let me just make also a comment. So that's a closing call. And so I believe there's 4 phases to the closing call. The first phase is just, Mr. Alio understanding their scenario, re-engaging what they're trying to do. The second is going over the funding review. And it's easier to intake or absorb, visually and audibly. The third is going over the program in detail. And then the fourth phase is just kind of going over what's needed to move forward. So breaking down to 4 different phases. And if we stick to that kind of structure, we're going to have success. So you want to add something to that, Frank? I'm sorry.
No, that's fine. That's great.
Okay. Let's take a look at a couple different credit reports. So I'm going to... let's pull this report right here. So let's start with Paris Hilton. So Miss Hilton here. So let's just, I'm saying, okay, Paris Hilton's her name. Obviously this is IDIQ. So that's the preferred service we like to use. So I'm going to submit this for review, but if I were getting this now, I'm going to just kind of graze over it, just glance at it. And so it's her report. Now, this is a little bit older. If I got this today, that would be a red flag. This is a year old. So no bueno. But if that was, 2020, still, if it was 2020 from October, I'm still going to demand something more recently. I'm going to. Things can change so fast. So, here's kind of a summary. I would just make sure this is her current address. Is she living on Hunter's Ridge in San Diego, California? So then her scores, 714, 727, 660. So you can see her Equifax a little bit different. If you're dealing with a real estate program and go with mid-score, okay, great. We're still at 714. But again, this is the unsecured finance program type of call. Here's the summary. So what do you see, Frank, in the summary? What do you like about the summary?
Well, she's got 10, 17, and 18 open accounts, total accounts, and she's got a number of open accounts. And I see a derogatory and a collection. Ooh, I don't like to see those.
And then, public records 0, so no bankruptcy. Okay, great. And then inquiries, a couple of inquiries here. So this gives you, now that basically says, I got to look out for that collection and derogatories. And she has open accounts. So that's just a preliminary. So it's not so bad. Going into some of the accounts, CB Express, the things I'm going to look at, the type of account, it's a charge account. Remember, that does not matter. We don't care about that. Lenders don't care about charge accounts, but even more so, authorized user. That means this account is not based off Paris's credit. It's off someone else's credit. Other things I normally look at would be date opened. This is opened back in 2011. The credit limit is 2420. But again, not a benefit. It does not belong in the benefit column because it's an authorized user account. You got to be a CB. Victoria's Secrets. That's what it is. Okay. Charge account does not matter. We don't care. And again, it's still authorized users. So either way, I would just ignore this. Major financial. It's a charge account. Doesn't make a difference at all. Don't care about that. So what I'm looking for is, credit unions or national lenders. And so here we go. We've got the first one, which is a Capital One. That's a credit card. And, again, authorized user. So someone is just letting her use their credit. So not going to be a benefit, even though this is open in 2014. It has age and it's a nice limit of 11,500. So, if she were not to qualify, we would be wanting to talk to this person, right, Frank? The person who is the authorized user of this account or the owner of this account.
Correct, because if it's somebody who's allowing her to use their credit cards, they may also be willing to, I don't like to use the word co-sign, I like to use the word become a credit partner so that she can achieve her goal of getting her business loan.
So here's telecom. This is one of those collections for $134. So it looks like an open collection. So that would be an issue.
Now, Trey, if that collection was paid, that would not be an issue?
As long as it says paid, it's totally fine. It doesn't necessarily have to be removed, but just paid in paid status, then we are good to go. And so as we're kind of winding down, another utility collection, small amount of 443 or 430. Really haven't seen any good things for the good column for Miss Paris Hilton. So we're going to jet down towards the bottom real quick and look at the inquiries. So again, this was back in 10th of October of last year when this report was ran. So I can see she went for a personal loan the month prior in September. Went to another bank there in September. Chase in September. Discover, Citi, Wells Fargo. She is denied hard. So whoever's worked with her is shopping her around like crazy. So, scores were good, but all the credit is not hers. And the credit that is hers are in collection, and she has a lot of inquiries.
And another way of saying the word inquiry is to say denial, because if there's an inquiry and there's not a loan that's attached to it,
Right.
that means they got declined.
There we go. Absolutely. So that is Miss Paris Hilton.
The names have been changed to
Yes.
protect the guilty,
That's right. That's right.
Okay.
That's exactly. And so next report we'll take a look at. I know it's not IDIQ, but we've got 3 reports to look at. So Mr. Don Trump, this is back from September of 27 to 2019. So he's still in trouble. So anyway, scores of 681. You got your summary. Credit cards 19. That's a lot. Oh my gosh. Real estate. That means he has a mortgage. That's good to see. And so I just by looking at this, what do you think is holding down the scores, Frank?
Well, I don't know, but I looked at 6 auto loans. That shocked me earlier today.
There we go. Yeah.
And then 4 student loans. That was kind of strong. I think maybe what could be holding him down is the 19 credit cards might be a little bit more than his debt to income can service.
Yep. Basically a lot of debt. I mean, if you got a lot of accounts, that means mostly you got a lot of debt. So absolutely. Oh, wow. Look at that. Fit Body Boot Camp. My birthday. Look at that. So I help out people looking at Fit Body Boot Camp to get funding for their franchise. And so, the franchise, the unsecured business finance program would not be a fit because the franchise is like $300,000. That has to be an SBA. Anyway, he's a plastic surgeon there as well. Okay. Okay, let's scroll down to the accounts. And so we're looking for open credit cards. And here we go. Discover Bank. All right, that's a credit card. That's what we like to see. It's currently open. Okay, great. It was opened in July of 2013. That's got some age on it. Limits of 14,500. So that is a rock solid type of account that we like to see. Also, we see that his high balance is 13,455. So he's pretty much ran it all the way up, and he's got it pretty much all the way back down as far as a balance of $48. So this is like this is a great account. I wish everyone had this. Next is Citi. So Citi is a credit card. And it's open. That's good. Opened back in March 17 of 2017. So right around St. Patrick's Day. And so if it was today, we would be saying that's 3.5 years. So that's above the minimum. Nice limit. Love to see that. It's his individual, means it's his account. It's not an authorized user. So good. 2 solid accounts so far. So far, he would already be qualified, in my opinion. AMX, credit card, opened in 2017, $2,000 limit, kind of low, but, he's already got some really solid accounts already in his behalf. Charge account, don't really care about charge accounts. So, but this one would be, if I were looking already, I'd be so, okay, where's anything negative? And so let's find that negative here, I guess. Citi open 2018. It's over 2 years right now. Nice limit. Okay. So these credit cards, the balances are fine. They're not out of whack, right, Frank? So he's not over leveraged so far on the credit cards. So it's got to be the auto and student loans as far as the debt that he's really carrying. Chase 2014 open, $10,000 limit. So this is a good candidate. Even though his scores are 680, I'm not going to worry about the other type of debt. If you look at, here's July 2009 opened. That's a bank credit card, $3,000 limit. That's off. That's kind of weird. I wouldn't have this open if I were him. There's no reason to. I've closed an account before because the limit was so low. I don't want to get a negative or a late payment on it for forgetting about it. So,
Well,
then,
there's something else that could be done. In maintenance, you could be asking for a higher limit. If you've got a credit card like that, you can just simply call the bank and ask them to raise your limit, and many times they'll do it.
yeah, definitely. And I would kind of stay away from it right now because I don't
right
see it
now would
happening too
not
much.
be a good time.
Yeah, but definitely that could be something that Mr. Don does. So this is a good report. And so I want to go ahead and get down to the last credit report real quick because I know we're getting close to the time. But the last credit report I just kind of briefly show is from someone who came through, and it's my FICO. So back from October. And so I'm not going to really go through the details, but I think, Frank, you wanted to kind of show how I'm going to scroll down to the accounts. And so most of this at the beginning is just verbiage, just their graphs. And this is like a selling point that my FICO does. I'm not going to read through all this. It's just waste of my time. Scores, okay, good, very good, very good. But I want to get to the accounts to see their open credit cards and balances and limits. So this is just a lot of stuff here. So finally, there we go. Okay. So now we're getting to the accounts. And so, like we said in the first call, Wells Fargo, I was really not quite sure what this was. And so I think looks like an installment loan, a student loan. There we go, student loan. So that doesn't really matter. Next account is American Express, even though it's on the next page, and it shows $16,000 limit and balance of $185. You got to kind of look around and see when it was open. So I'm scrolling down a little bit further. Here we go. Open date. There we go. 2017. So Frank, this is what you're saying before. This was not one of your, sites you like to use, right?
It's not a favorite site because the information is too spread out, and it's too easy to make a mistake, or it's too easy to overlook something that's important.
Yes. So in essence, this gentleman did have solid credit, but just took some time to scroll through it and figure it out. So Mr. Milton was a good candidate. Before that, I want to show you. So once we look at a review, I want to show you some examples of funding reviews that we'll be presenting. To start, we'll go with the gray skies. So things that weren't the best and some reasons why people weren't qualified. This individual was not qualified, and we still want to present this to them so we can help them, keep helping them and moving them in a certain direction. But she had charge-off history. So having charge-offs on credit cards is not a good thing. And she had too many inquiries the last 6 months, and she had about 8. So just one of these things would disqualify someone, but your underwriters will be very thorough when giving someone a denial. And then also towards the end of the funding review, it mentions, credit partner. And then possibly look at other business funding programs. Another, I guess one more, I got a couple actually here. Let's show you, let's go, this is what I want to show you. I didn't get a chance to show you earlier, Frank, but this is an example of someone. The first page of the review is more about don't shop your credit around. It could alter the projections. So it's kind of like, don't go anywhere else.
This is my blue sky, by the way.
Yeah.
When I see these blue screens, that means blue skies to me. That means we got a deal.
So this is someone that we are exploring multiple programs, equipment financing, and also the unsecured business finance program. His name, he goes by Reza. And so Reza, congratulations, right? We said this is per you, Frank, you're qualified, but this person had to make some pay downs. So for Reza and his business to move forward, we give a projection of 25 to 40,000. That's the opinion of the underwriter, but he's got to make addresses debt, his credit card debt first. So credit card pay downs required. And so he has a PPC account. He has to pay down to zero balance. And I make sure we never have people close the account. AMX, pay down to be below a $2,500 balance. Chase to be below $2,500 balance, and a couple more. So in total, it's right around about $6,000 I think he had to pay. So that has to be done before we can help him, no matter what.
So could you give us some examples of how he could achieve paying down those totals?
So Reza, he goes by Reza. His options are this. Option one is pull money out of your pocket, your checking or savings, to pay down your debt yourself. Option two is, maybe your spouse or a family member or a business partner has a credit card available with a limit availability to balance transfer the debt onto them for the short term. So I really highly recommend, if we're exploring any program, you always get the spouse's information as well if they have a spouse. And so maybe the spouse has a $20,000 credit card that's very lowly utilized. Reza could transfer this debt onto her for the short term instead of paying money out of his pocket. The third and last option is there is a third-party lender that will lend someone capital to make their pay downs, specifically to go through this unsecured business finance program. And we avoid it unless it's the only option, because there's a totally additional fee by the lender on that option. So,
but you've given them 3 different opportunities, 3 different options to achieve the goal that they wanted to achieve. And that's the important part. We're trying to get the people the money for a reason. I don't know what their reason is. They do, and they love that. That reason is important to them. So what we're trying to do is achieve their goal for them.
All right. 2 more funding reviews real quick. This is Mr. Coe. I want to show you this one because this is someone who did not qualify for business funding because his credit wasn't deep enough. He had a required action of removing a fraud alert first and foremost. And then, Mr. Ed Bond gave me, short credit history, prevented business projection. But we gave a projection of personal funding in the form of personal credit cards in this scenario up to $15,000 to help out. He is a real estate investor, but this is like, you got to get through step A and B before you get to step C and D down the road. And then the last review, we'll put right here. This is Mr. Shelton that we looked at earlier, who had the MyFICO report. So he qualified and pretty solid projection of 40 to 60,000 as an aggregate total for business funding for this program. He did not qualify for personal because he has too much personal credit already. Remember, he had a ton of accounts. So if someone has a lot of personal credit, they're not going to be qualified for more personal funding. And then to give an example of his file, this is, well, let's see there we go. Oh, what I do here. All right, my computer, oh, there we go. Oh, my computer's tiring out here. This is an example of, we use Google files for every client going through the unsecured business finance program or personal term loan or unsecured personal finance. So this is his results over the last, I think this week. So you can see these are lenders in a specific sequence that was designed by Mr. Jeremy Daggett. He got, 20,000 from Texas Capital Bank, 27,000 for Chase, then a 5, 9, and 9. If it was not during a COVID environment, these $9,000 and $5,000 approvals would be more like, 15,000 approvals, 20,000. So this would easily be a 125 type of file of capital if we weren't in this environment we're in right now. So this is probably the best case, I think, right now, achieving 70,000. So that's why it's important to, involve the personal. And so getting the person's income information, make sure it's W-2 usually, and then if you add like, Frank, this person makes 70,000 W-2 annually, we'll be submitting his credit report and his income information to, give that person a combination projection to get a much higher amount of 125 or 150, leveraging their credit and their W-2 income. So,
and
then
when he's saying W-2 income, what he's referring to is the personal term loan, the PTL. That's what he's referring to.
Yes. Personal term loan. Definitely recommend understanding the person's income status. So therefore, I cannot tell you how many times people need to reach a certain number and they're not going to reach it just getting business funding because of the market. So you have, especially the personal term loan programs, popular for real estate investors who want cash in hand with flexibility on use of funds. So having a combination of unsecured business revolving credit under your company profile and cash in hand through the personal term loan program is a great mixture for, capitalizing on many different projects. So, when analyzing a credit report, first and foremost, you definitely want to educate people. If someone has a score of 650 and above, let's definitely take a look. I'll tell the person directly, like, listen, Mr. Jones, let's figure out what's holding your scores down, and so you can go about the appropriate actions so I can help you with this funding program. And so let me provide you feedback. And sometimes they'll ask, well, how much does that cost? And I'll tell them $1,000 or nothing. You choose.
So, I like that one.
There you go. And it makes them laugh just like that. So,
I like that one.
Anyway.
Yeah. And because we have three different levels of credit repair, credit restoration, and credit sterilization, in addition to all the things that we talked about tonight, we can also employ those other vehicles in order to get him to achieve the goal that they want. What we have to make them realize is we should get everyone pre-qualified, especially if they pre-qualify for the flagship product that we have. More than likely, they're going to qualify for everything else, especially if it's real estate. If they qualify for this program, pre-qualify, then it's going to be more or less a slam dunk on the real estate. In addition to that, they're going to have working capital in their hand. So for to put down the down payment or to put down, pay off back taxes or liens on a property or to pay closing cost, you'll have the cash in hand to do that. And that's why it's so vitally important that we get them pre-qualified before they go out shopping for their buy, fix, and flipper. And so that they don't come to you or to Frank and say, Frank, if you don't get me approved by next Monday, I'm going to lose my $10,000 deposit. And I say, well, I'm so sorry that you're going to lose your $10,000 deposit because you did it wrong. And I like to try to make you try to drive it home. You want to get them pre-qualified on the flagship product first. Then everything else just falls right into play. Trey, if you have, we're past the hour, but if you have time, you can take some Q&A. I just wanted to say thank you so much for putting my initials down at the lower left-hand corner. Frank Alio I've been looking at that all night and saying, how thoughtful of Trey to do that for me. I appreciate that.
I got to tell you, I literally spent like maybe 10 minutes last night, probably around 10 o'clock at night, my time, trying to figure out a name that had all your letters. I came up with Kafrank Olia, but I couldn't really come up with a name like instead of Paris Hilton or Donald Trump.
Okay.
Anyway, let me just say, especially with real estate, things I've learned, real estate investors, the things I've learned over the years with this program or these programs is, sometimes people may not move forward because they're not ready with their project. And I want to say, you need to be proactive and not reactive, I want to deal with people. I want to help people who are, are being proactive with their actions. And so you want to get the capital in place. So when you do find the right project, you can pull the trigger without any hesitation and not be caught trying to beat the gun and stress out and so forth. So start building the business credit profile immediately. It's, or maybe their project has gone away. Well, start doing it now. So you just felt the pain of it going away. Let's make sure it doesn't happen a second time.
And if there are any questions, all we need to do is just unmute yourself, shout out your name, where you're calling from, and go ahead and ask Trey a question, and we'll see if we can't get you an answer. Any questions? I was told today that I cut you off too early, Trey. So let's just give them a minute or two to think about what their questions might be.
Sure.
But again, just unmute your mic, shout out your name, ask the question that you have. We'd like to know where you're calling from.
What I'll do, I'm waiting for that. I'll check into my dog, Frank. Let's check in my dog.
Oh my goodness.
Let's see. Where's my dog? So she's at the dog park.
You have a dog park.
Well, I want her to have interactions today while I'm working every Wednesday. And so, here we go. So this is her, right? Oh, no, that's not her. So I'm open for questions. Oh, here she is. Here's Zena right there. That's Zena. She's looking around. So.
Diane in Denver.
Hi, Diane. Good afternoon. Good evening.
Well, I have a question. How's the weather there today?
Weather's good. It's it just gets dark too early. That's the only bad thing about Southern right now and being in mid-November. So, but everything it's too perfect most of the time. I get bored of that.
Okay,
I have a
thank you.
question. This is Tanya in New Jersey.
Hi, Tanya.
Hi, Trey. I have a question with COVID going around and a lot of businesses and real estate being affected. I'm trying to find out how is this affecting the business, and if you had somebody that was in business and they've just ran into a little difficulty right now, but they had perfect credit and credit history, how are you handling that?
Okay, that's a good question. So, we have a pretty diverse portfolio of business products, and then there's real estate products and personal capital. Everything's been affected in some way, shape, or form due to COVID. The unsecured business finance program is still strong. The biggest difference is we're just getting a little bit lower results for our clients. But let's say you have someone who owns a restaurant that was closed down, they didn't have any revenue, but they still protect their personal credit. They're going to have success with this program because at the end of the day, we don't need to provide financials like bank statements or tax returns.
Right.
So therefore, it's imperative that this could be provided as a solution and help them get through the down times because it's revolving credit. Remember, it's not like a loan where there's a term and you with the business credit cards, most of the accounts are going to have a 0% promotional rate. So it makes an easier debt to service. So I would highly, highly recommend anyone who's been affected by everything that's going around, as long as they preserve their personal credit, then let's explore this. And I really was preaching this several months ago. Frank will attest to this, that people should be leveraging their personal credit now to get funding now, because personal credit's going to take a hit across the board. I believe that over not just now, but over the next several months, and so, because if you've fallen behind on your bills, people's credit's going to take a hit. But if you have any, with this program, it's really good for startups, but existing businesses works just as good, but actually better. So if I were to go back to one of these funding reviews where someone got a projection of like 40 to 60,000 of business funding,
Right.
I could say if they've been in business for at least 2 years, I could say that I can increase this projection by 33%. So we'll get more capital with this program if they've have their business entity be at least 2 years of age.
Okay.
So yes, this is a great option or great solution for people that have an up and running business, a nail salon, a bar, restaurant, people that have really been affected harshly by the environment, because this program is not taking consideration financials, collateral. It's just solely, remember, projecting that personal credit of that individual. So yeah, I think it's something that you should definitely explore.
Okay.
For sure.
Thank you.
You're welcome. Thanks, Tanya. Diane, did you have a question besides the weather? Was there anything else? Okay.
All right. Well, guys and ladies, thank you very much for your kind attendance. And Trey, again, thank you so much. And we want to show Trey some love. So go ahead and unmute your phones, and let's go ahead and make some noise for Trey. Go ahead and unmute your phones and let's make some noise for Trey. Thank you, Trey.
All right. All right. Thank you, everyone. Thanks, Frank, for
Thank you.
all that. And everyone
Thank
have an
you.
amazing Wednesday night. Thanks, guys.
All right. God
Bye-bye.
bless. Bye.
Bye.